Okay, as you know, there's bad news and then there's bad news. Today, there is some bad news. All right, so let's talk about it. Okay, so today I want to talk to you about an article that's out of Zero Hedge, and it highlights what's going on right now, and it's not good. So let's get right to it. And by the way, look at this article. Terrified of a Bud Light situation, Target pulls Pride Month products in certain stores amid boycott calls. Remember my video from the other day talking about this issue at Target? And so I don't know whether someone showed them my video, but apparently they're starting to reverse course at least a little bit on their woke stance. So maybe that's a good sign. People power, right? Okay, let's get back to it. Okay, so this is the article I want to talk to you about. Futures slide, European stocks tumble on barrage of global bad news. U.S. equities futures drift lower for the second day following a deluge of bad news across global markets, driving European stocks to their biggest drop in 2 months. Now, it's useful for you to know that Wall Street sees what's going on in Europe as kind of a canary in the coal mine. Usually, really bad macroeconomic news happens in Europe first, and then it spills over to America. That's just the way it is. So traders pay very close attention to what's going on in Europe, and then they extrapolate that to what is bound to happen over here. So pushing copper below $8,000 and snuffing out this year's gains in China's equities. As of 7:30 Eastern time, and I'm recording this a few hours after that, S&P futures were down 0.4% to 41.43, following Tuesday's 1.1% drop, with NASDAQ futures sliding the same amount. And Bitcoin got the usual Asian session trapdoor as gold rose. Now, let's talk about gold for a quick second here, okay? Central banks around the world are loading up on gold, mostly in countries other than North America, like the U.S., Canada, and some of the Western countries. But everyone else in the world, they're loading up on gold in a very big way. So our governments are not doing what they really should be doing, at least in the West here, in the U.S. They're not, okay. But what else is new, right? But I do know that Poland, for example, they're resuming their purchase of gold. Here we see a chart of the E-mini futures. In pre-market trading, mega cap tech was mixed with Microsoft and Amazon recovering, while the rest are lower. NVIDIA Corp, a stock at the center of the artificial intelligence frenzy, lost almost 1%. Regional banks are mostly higher as PacWest continues to sell more assets to meet liquidity needs. Why this is positive remains unclear, while large cap banks are lagging. Here are the most recent notable pre-market movers, and then go through some of the movers. But let's talk about this PacWest for a second. Let's take a look at a chart of this guy. Okay, so this is PacWest, and it couldn't get anything going today. It tried to have a little bit of a rally yesterday, but gave it all back. But let's look at a 3-month chart. Just look at the devastation here. Okay, so PacWest announced that they're selling some of their assets in order to clean up their balance sheets, okay? And Wall Street took that, as good news for some reason, and had a little bit of a bounce there, but it couldn't go very far, and now it's rolling over again. Now, let me ask you, okay, if PacWest is selling its, quote, assets, which assets do you think they're selling? The good stuff or the bad stuff? Well, nobody's going to buy the bad stuff, right? So they're selling the good stuff. So they're resorting to selling their good assets in order to keep their head above water. Now, this is not a good sign. Listen, whether it's you or whether it's a corporation or whether it's government, if you have to raise money, what do you prefer to sell first? You want to sell your bad stuff, right? You only sell your good stuff when you have to sell it. And that's what we're starting to see going on with these banks, is they're having to sell their good stuff. Their garbage stuff, like mortgage-backed securities, they can't sell them. Eventually, I think the government's going to have to come in and bail them out again. They're going to take on these mortgage-backed securities like the Fed did last month with several banks. This trend is going to continue, where the government is going to have to step in if they want to save any of these banks. And chances are they're going to just let a lot of these banks fail because they want to. This part of their agenda. Let's go back to the article. There were plenty of reasons for investors to be pessimistic, according to Bloomberg. In the U.S., there was little progress in the debt ceiling talks, and investors are increasingly worried about a default. Yields on securities maturing June 6th topped 6% Tuesday, compared with bills maturing May 30th that are yielding about 2%. China's sputtering economy and worsening geopolitical ties also hurt sentiment. and UK inflation came in higher than all economists' expectations, setting the stage for a painful encounter with stagflation. Meanwhile, as discussed earlier, Europe's luxury bubble indeed appears to be bursting, as luxury stocks, one of this year's most popular trades, extended losses. European real estate and car makers slumped on concerns that UK interest rates are heading higher. And they highlight, this guy here. World's richest man sees $11 billion in wealth wiped out after a stock rout in European luxury goods. All right, so who's the richest guy in the world now? They keep changing, right? Okay, I confess I don't know who that guy is. Okay, so remember when I told you that the first category to go when economics get bad, when the economy gets bad, are the luxury items, the luxury category. Okay, you can check that box. Done. Okay, so I'm not going to go over the rest of the article here because I've got to get back to my discussion with Rob. But you can go to Zero Hedge and read the rest if you want. But let's take a quick look at what's going on in the market. Okay, so I'm recording this around noontime. So the market, so the day is about halfway through. And you see the market at the moment is down 280 points. But look, this is what I meant by there's bad news and then there's really bad news. Let's remind ourselves of what the important levels are. If you look at this 3-month chart, remember I've been telling you to watch this level right here. It looks like 33,000. It's really like 32,009. It's just a fraction under that 33,000 level. Well, it broke. And prior to that, this rally here failed to take out the previous rally, and that rally failed to take out the previous rally there. So we see 3 successive lower highs. So if you just draw a line here along these peaks, you see the downward trend. And then if you draw a line along the support levels, an imaginary line, you have what's called a descending triangle. Well, this level, a very important one. We've been watching this level. I told you to watch this level. Well, today we broke it. Next support level is down here at 31,005. That's the next support. Now, it's not going to get there in a straight line, but this is where we're heading. And if you look back further than that, the next support after this one, after 31,005-ish, we'll call it, the next support level is really 29,000. So this little V here that put in, that's the next big support level. Okay, so bad news is starting to accelerate. The street is starting to get wind of everything that we've been talking about for a while now, and important levels are being taken out now. So you got to watch what's going on in this market in here. Now, I'm loving this, okay, because I think like a trader. You should think like a trader too. Even if you're not actually trading in an active way, you should think like a trader. And then you make your decisions, accordingly. Now, one final thing. Let's talk about this debt ceiling issue going on at the moment. Okay, now, historically, they always come up with a solution in the 11th hour, right? They come up with a continuing resolution and kick the can down the road, or they negotiate a package where they get the other side to agree to put garbage into the bill in order. They put a lot of goodies into these packages at the very last moment. I want $5 billion to create a lesbian dance theory center in my state. Things like that. They put things into these bills that normally would not pass, but they use these crises in order to get things done that normally they could not get done. These politicians, right? Now, if they do fail to come up with an agreement, if they do fail to raise that debt limit, okay, all bets are off in the markets. But I don't think it would happen. Even if it did happen, they would quickly come up with some kind of a fix. Rob has been talking to us lately about this normalization issue. Normally people would be really scared right now, but we've seen this so many times. We've seen this movie so many times before that we assume what's going to happen. We assume that they're going to come up with a solution in the 11th hour. And that is actually my assumption, that at the last minute, they are going to come up with some kind of a Band-Aid. But the important thing for me, the bottom line are the support levels in the markets. Those are the ones you want to watch. And one that we have been watching for a little while now has been broken as of right now, as I'm making this recording. Let's see what happens next. But listen, things are bad and they're going to get really bad. So you have to start preparing for it. Don't be a victim of this. Take advantage of it. Reduce your exposure to your bank. Buy some gold and silver and establish streams of passive recurring income.
Copy that.